Good morning, afternoon, or evening, ladies and gentlemen. Allincrypto here, and welcome back, guys, on this wonderful Wednesday for what is going to be another jam-packed daily cryptocurrency market update. As always, if you are new to this channel and finding yourself on my videos for the first time today, don't forget to check out that subscribe button because we drop an update just like this one around 1 p.m. UK time every single day to help you guys stay up to date with the latest and greatest things happening within the crypto space, but also the broader markets. That's exactly what we're going to be doing in this video. We are going to be looking at a clip of Jerome Powell, he's kind of giving the markets a bit of a pounding at the moment. Jerome Powell speaking about the economy and giving a little bit of further guidance on monetary policy moving forwards. And we have spoken about, and it's been a consistent theme this year, going into this year, 2024, we had about 7 rate hikes or cuts, expected. We said that was way too premature. We didn't think they needed to be as forthcoming with rate cuts because we've got a really strong labor market, really good economic data in the US, whether you choose or not to believe their data is an entirely other story, but we're taking it at face value. And they don't have inflation to their mandated 2%. And since we entered this year, we've now looked at 3 cuts, and now we are actually looking at no cuts potentially. However, I'm here to tell people not to worry. We're going to be looking at a number of things in this video that help me derive that opinion of not worrying. We're going to be looking at the historic correlation, which is something that allowed us to be bullish on the markets, even despite interest rate increases, because every time the Fed has increased interest rates, the stock market has gone up. Every time they've let interest rates go sideways, the markets have actually gone on and put in a new all-time high. So a continued period of sideways rates actually isn't that bad for markets. And yet I see all the same doomsday ding-dongs coming out again, time after time, every pullback that's occurred, saying, see, I told you, get ready for World War III, get ready for the crash, get ready for 2008 to repeat. And they simply have got the context of these markets wrong and are doubling down on being wrong. That is the definition of an idiot, ladies and gentlemen. We have been long the markets since the start of 2023. And every single pullback, the same individuals have popped their head above the pulpit and started to tell you how this is it. This time we're getting the crash, and we're here to say, no, that isn't coming. Certainly if you're in assets that are pegged against a rapidly debasing and devaluing currency. And we're going to be covering it all in this video, guys. Don't worry. A little bit fired up because it's annoying. And what's even more annoying for me, okay, conviction, if you're going to be a bear, be a grizzly one, right? I understand conviction, okay? And I understand that the system is in trouble, right? And that is going to lead to a crash. We just don't think it happens yet. And timing is everything in the markets. The other frustrating thing is how you get a lot of other content creators that are coming out acting completely defeated. Now is the opportunity of a lifetime, ladies and gentlemen, to get involved in the cryptocurrency space. You've had, in some cases, a 30%, 20% discount window on certain cryptocurrencies, and nothing in regards to the macro has changed. Yes, there's a bit of uncertainty, a bit of readjusting. Remember, we're in April, May, typically not great months for markets. That selling may come back in St. Leger's Day, there's seasonality to markets, so on and so forth. But the broader trend of things is still an upward one. Crypto still looks great. Yes, altcoins have sold off to the degree of 30%, some of them, but you haven't done your homework on what a bull market is like. We showed you on 2 daily market updates at this point just how many frequent 35% plus, being the smallest one, pullbacks Ethereum had on its journey from $88 all the way up to $5,000 back in the past bull market. And we're likely going to see somewhat of a repeat of that. I'm going to do a longer video where it's just me and the camera talking about that later on today. But we've got a lot to get into. I've kind of gone on a bit of a rant. It's frustrating how kind of feeble people are when it comes to crypto. And I think that comes from a lack of education in regards to this space, an oversizing, and just a non-technical approach to the markets, which we're going to be giving you in this video. So let's start things off with a clip of JP, not Jerome Powell, talking about the economy, where it's at, and then we're going to be looking at some really interesting things. I'm going to be giving you some reasons, not all of them, because this video would be hours long if I was to go down that route, of why we're still bullish and we're not worried about this. I think this is a short-term blip, and I think actually CPI is only one metric of inflation. You also have PCE, which he mentions in here as his preferred one, which is supposed to come out at 2.3% at the end of this month. It was 2.8. That's still very much downtrending. Inflation, yeah, stubborn. It's not just going to drop like a rock. You've got lots of variables. People are now citing the whole thing going on in the Middle East. This is their new reasoning for, I told you so. No, you've been waiting for this for the past 3 years. It still hasn't happened. Okay? You can't just say the market's going to crash, the market's going to crash. It takes 10 years to take place, and then you go, oh, see, I told you so. That's not helpful to anyone, and we don't want to be one of them channels and sort of economists. We want really to get the timing right, be a little bit more intricate and make money, and we've been doing a great job of that thus far, even with the pullback that we've recently seen. So let's dive into this clip.
Performance of the U.S. economy over the past year has really been quite strong. We had growth of more than 3% last year as rebounding supply supported both robust growth and in spending and also employment, alongside a considerable decline in inflation. The more recent data show solid growth and continued strength in the labor market, but also a lack of further progress so far this year on returning to our 2% inflation goal. So I'll say a little bit about our two mandate goals, maximum employment and price stability. As I mentioned, the labor market remains very strong. Payroll job gains have been strong over the first quarter, averaging just a tick above 275,000 per month. The unemployment rate has been below 4% for 26 consecutive months, which hasn't happened in more than a half a century, the longest streak of its kind. Strong demand for workers has been met by a substantial increase in the workforce due both to rising labor force participation and a substantial increase in immigration, as indeed Canada has experienced as well. So even with this strength, by many measures, our labor market has been moving into better balance over the past year. The ratio of job openings to unemployed workers was extremely elevated in 2021 and 22, has now moved back down to levels just above the pre-pandemic era. Surveys of workers and businesses indicate a normalizing labor market. So do the rates of both quits and hires. And broader wage pressures also continue to moderate, albeit gradually. So the overall picture for the labor market is one of real strength, but gradual normalization. Turning to price stability, our inflation mandate. Inflation, of course, declined quite significantly over the second half of last year, over the whole year, but particularly in the second half. But 12-month core PCE inflation, which is one of the most important things we look at, is estimated to have been little changed in March over February at 2.8%, and the 3- and 6-month measures of inflation are actually above that level. So we've said at the FOMC that we'll need greater confidence that inflation is moving sustainably toward 2% before it would be appropriate to ease policy. You know, we took that cautious approach and sought that greater confidence so as not to overreact to the string of low inflation readings that we had in the second half of last year. The recent data have clearly not given us greater confidence and instead indicate that it's likely to take longer than expected to achieve that confidence. That said, we think policy is well positioned to handle the risks that we face. If higher inflation does persist, we can maintain the current level of restriction for as long as needed. At the same time, we have significant space to ease should the labor market unexpectedly weaken. Right now, given the strength of the labor market and progress on inflation so far, it's appropriate to allow restrictive policy further time to work and let the data and the evolving outlook guide us. Come what may, we remain strongly committed to returning inflation over time sustainably to 2%.
Come what may, is there some signaling there? That is, of course, a joke. I don't believe so. So really interesting. It's very much in line with the theme of what's been happening and sort of plaguing the markets at the moment in regards to this readjusting that we're seeing for rates. Okay, this is kind of how the year's gone. You know, this is the sort of dot plot forecast for rates, and you can see, you know, the most recent one that came out on the 10th, so we're 7 days ahead now. It's probably even likely higher. There's been a readjusting, and this, of course, is the markets are watching this. They're readjusting to it. They're forward-looking. However, I'm really not worried. I think this is just a short-term blip, and I think he mentions PCEs there, which is kind of one of the Fed's preferred methods for looking at inflation. This paints a very different picture. The last one was 2.8 for February. He mentioned it. The next one's likely to come out at 2.3. This is good. He also said any kind of folds in the labour market, we're very willing to come down. May I remind people, and we're some of the few people that held our head above the pulpit and said, no, markets are going up despite rates. What you've been told is wrong. This is the Fed funding green, and this is the S&P. Look at what happens when rates go sideways, ladies and gents. And that's been true to today. We've been 100% accurate, and all we've done is overlaid the Fed funds rate and the stock market, basically, the S&P. Rates going up, markets go higher. So rates going sideways, we're not worried about in the slightest. Even rates going up, like look what happened here. Yes, it then led into a crash, and maybe that's to repeat, but we do not think that crash is imminent, and there's more juice to be squeezed out of these markets. We have technical targets for crypto. We have technical targets for gold. We have technical targets for the stock market, Amazon really, most notably, that we still think are going to get hit. Okay, I have no idea how people have just done a 180 like that and instantly, all right, the crash is here. It's madness to me. And it's because they've been so wrong, they're now going, okay, well, maybe this is the time. Maybe this is the time. Maybe this is the time. And they get rugged, basically. The markets aren't going to rug you at this point, I don't think. I can't say that with 100% certainty, but I'm positioned as if they aren't going to. And maybe I'll be wrong in time. Who knows? But I can tell you, we've been damn accurate in regards to our thesis on everything thus far, and I think it's going to continue. So this is obviously the dollar. This is WTI oil. Oil's been the real driver of inflation. And of course, this has led the dollar strong as they're kind of pricing now out interest rates. I want to remind people of, even if they hold interest rates up, they're still going to devalue the dollar like crazy because the amount of debt that they're going to have to issue to support that, just the interest payments, let alone all the spending and everything. We've seen more bonds issued, ladies and gentlemen, in 2023 than we saw in 2020 when they furloughed everyone. They said, stay at home. It's not safe to go out. We're not even going to embark on that. But the game is the same and it's spiraling. It's why we question the origins of Bitcoin, because it's almost too good to be true. We're going to be doing a video on the NSA paper later on this week. Probably just be me and the camera. There's some really interesting things. People also think they found the IP address of Satoshi, and that might be a CIA build, whatever it may be. We can discuss that in the coming video. But this is just a video really just on, kind of telling people not to panic. There's no need to panic. You've got this great fundamental narrative for this crypto bull market with institutions and so on and so forth. You're going to get altcoin ETFs, in my opinion. People are forgetting about the altcoins. That's perfect for somebody like me because we'll gobble them all up for cheap. And this is exactly what happened in the last cycle. Everyone forgot. They couldn't stomach it. They couldn't stand the volatility. And then, everyone was going, damn, well, that wasn't a bad time to invest, was it, back in 2020 or 2018, 19? And it wasn't. And I think that opportunity is still here today. Let's talk about crypto because we've danced kind of all around the place. This is the Bitcoin chart. We still have a higher target for this. This is just a pullback in what is a broader uptrend. There's nothing about this chart, and I define anybody to take a look at the Bitcoin chart and tell me that they are bearish on this and that this is confirmed in a downtrend or likely to enter one. There's no signs of that. Yes, you have fallen slightly out of this top here. And I don't think it's a top. I think it's just a pullback. I really do believe that. I'd like to have seen this a little bit more descending and not so sort of horizontal. If we look at the total too, which is really the chart for me as I'm in majority altcoins, it doesn't look great on the smaller time frames, but when you zoom out, it looks fantastic. Still believe this is going to come to fruition. And I think that was buying up. I wouldn't be surprised if this whole thing that took place over the weekend was just a liquidity grab. For the institutions that are now absolutely here, there was a list published in regards to 30 fund managers have declared ownership over BlackRock's Bitcoin ETF. This is from Bloomberg's Eric Balanchunas. This is just the start, ladies and gentlemen. The floodgates have opened. We're going to see Bitcoin spot ETFs in Hong Kong coming, I think, the 30th of this month. So what are we? 13 days away. We've seen the demand, and we showed on our previous video, the demand for gold all around China, not just Hong Kong. Bitcoin's going to be a higher beta of that. Gold's going high. We still think the market's going high. We're not in this doomsday camp. You're going to have pullbacks on the road to higher prices. An uptrend doesn't just consist of upside. You get pullbacks along the way. And just to kind of show everyone that Ethereum chart once more, we could use a variety of altcoins, but I think Ethereum being the biggest of the alts really kind of summarizes things. This was the last bull market. A 35% pullback is actually not a bad one. And you can see this one, 30. We've already had some pullbacks, and we're going to see more of them. But ultimately, we think it fixes and recovers, and it's that max fear that's going to propel it to the upside. When people get bearish like they are now, you fill in the rest. That's all I've got for you in this video, ladies and gents. Always a pleasure. On that note, I'm going to love and leave you. Keep the faith. I personally do whatever it is you guys want. None of this is financial advice. Make up your own minds. But I'm personally still very anchored on this space, very almost thankful for this recent pullback. I can say that maybe because we're still largely up. But also because, you know, I'm still looking at certain projects, certain areas. Compute's a real one. Very excited about and kind of looking to load up some more for, you know, this total 2 playing out and getting to $3.7 trillion, so on and so forth. That's all I've got for you in this one. Thanks a lot for watching. Have a wonderful Wednesday. I'll see you all in the next one.